The broadcast is now starting. All attendees are in listen-only mode.
Hey, welcome everyone. Greetings from around the world, wherever you're tuning in from. Great to have you with us. This is Stan Heller speaking to you from Lethbridge, Alberta in Canada. And it looks like we've got a great international audience again. So thank you so much, everyone, for joining us. Hope you've got your coffee or tea or whatever it is that you need to get you through the webinar. We plan to go about 90 minutes once again. And we have our very special guest speaker, Dr. David Paul, with us, who will review the US and the UK markets. And just on a scale of 1 to 5, I just want to ask everyone, how much difficulty did you have in the markets over the last, say, 10 days or so, on a scale of 1 to 5, 5 being the most difficult, 1 being no problem, went to cash, or primarily in cash, or stopped taking positions? Maybe just let me know in the chat box what you thought about the market. 1 to 5, just whether it was difficult for you as a 5, and whether 1 is no, this was expected, and somewhere in between, a 3. So I'm seeing some 5s, a 4, 2, Marty says. Gary was a 2. Rajan was 5555. So looks like a lot of people had some difficulty. Kamel said just a 1. I was following the guidance of VectorVest, and certainly there was lots of warning with VectorVest with the confirmed down call, the DEW, which came at about the same time. This time the DEW down, but there was some warning, and the enhanced color guard reports were kind of warning us as well. So that's great. Yeah, and RC says VectorVest had me in cash. Very good being on the sidelines. It's certainly more relaxing. And when you know that in every country that we have for VectorVest, that we had a really good uptrend for the last several weeks and months. What we mentioned last time at the September 11th forum was that job 1 was to protect those profits. And so that's great. And Raphael, sort of midpoint at 3, took some profits by selling and raising cash. And that's great. Welcome, Paul. And Rod, welcome. Rod says, I just let the dividends pile up, so no panic there. If you're good long-term holds, you can weather the storm, maybe buy some puts to protect a little bit, or just let your dividends grow, knowing that when the market bottoms, as it always does, you'll be back in a good place. Michael, welcome from the West Coast. So that's great. Well, thanks everyone for that bit of early feedback. Always appreciated. Just did want to let you know, and I know there's a little bit of lag time going to the YouTube here, but any second you should see the risk disclaimer letting you know there is risk in investing. And if you can read the top part, but the second part, the bottom part, I'll just highlight everything you'll see in here today is provided for educational purposes only, should never be considered investment advice. And the information is designed to empower you to make your own investment decisions, and these decisions are yours and yours alone to make. So again, welcome everybody. There's still people coming into the room, and you're always welcome wherever you're tuning in from. It's great to hear where you are tuning in from. Johan says, sorry, but you are from Austria. Oh dear. And Marguerite says, the guppy has been very helpful. I can see when to get out of Dodge. And the guppy is a strategy we taught on the International Forum a couple of years ago. We started there, and then I revisited it during the recent Financial Freedom Summit with VectorVest. It's a really terrific system. And it's kind of interesting because we had a discussion about it in our Mastering Moving Averages class, and one of our students said it's a little bit busy. And you know, we put on the 5, 8, and 13 instead of all six trader moving averages. And boy, it really cleaned up the graph. So there's different ways to work on this, right? And welcome from Houston, welcome from Naples in Florida, Jerome. It's great to have you all with us. So we're going to have our market review, which I think is absolutely critical this morning, and we'll spend a bit of time on that. And Dr. David Paul will come in and talk about the US and the UK. And then I'll talk about Unisearch Magic, just giving you a few tips and tricks that you can use with our Unisearch tool to find the best stocks. Some of these you might have already experienced or heard from. Glenn Tompkins does such a great job in the Thursday lessons on the training tab. So those are archived now, but some great ideas there. But I think I'll give you just a couple more or three more that maybe you haven't heard of before that you might find really helpful. So stick around. And if you like this kind of a presentation, the international flavor, do make sure you click on the like button. We always appreciate it. We're trying to grow our VectorVest nation and awareness. Our nation, as Glenn Tompkins started, or maybe the Jockey Club, I'm not sure, but love it. And because we're on YouTube and not broadcasting necessarily on GoToWebinar, just know the recording will be available on YouTube almost immediately after the webinar. You can click on it and have the replay, catch any points that you might have missed. So it's all good. Oh, and Glenn, in those three lessons on Unisearch, Michael from Ottawa says Glenn didn't mention anything about finding the best stocks using industry momentum. So I've got that covered in the slides, Michael, and I know you have a little different approach, which is useful as well. There's a lot of different ways you can go, but I'm going to show you the way VectorVest teaches to find those industries that have the best momentum. I think subscribers here and people attending for the first time will love it. Yeah, and Jake from Toronto just chatted in up at the top. The squeeze play for me, Stan. That EMA squeeze has just proven so popular with our subscribers and so easy to set up in a search and for graphing, and it's pretty fantastic. Well, listen, we have the privilege and the benefit here of being able to analyze what's going on in 5 key world markets using the color guards from VectorVest. So just looking at the top left, you'll notice, well, I put in just in the bottom right, you'll notice our last meeting was September 11th. And so there's where we were at in terms of year-to-date percent gains. And then here's where we are today. And you can see over here, unless you've taken some defensive action, held to your stop prices, these are the losses that the markets have incurred just in those 3 weeks since our last meeting. And Europe, which had the most to lose, they were up 21% year to date in September. They did pull back the most, losing 4.2%. And then the UK losing 3.8%, Canada losing 3.4%, and Australia losing 3.3%, and the US losing 2.5%. So not too severe. And we're not in correction mode here at all. This is just a pause or a pullback, but certainly it's concerning. But when you look over here at the top left, then here's Canada, still with a 13.64% year to date. Currently, as of Friday's close, VectorVest not advocate buying any stocks. Long term, we are in a confirmed down call. The primary wave, that short-term trend in the first column under the trend, is also down. The MTI has been falling, for 13 days since September 15th. It's been pretty much in a downward spiral. And the buy-sell ratio, which is so critical, I wrote about it in my essay, and I'll show you that in a minute. But the buy-sell ratio did get down to 0.22 and 0.20, and then we had a little bit of a lift from that low, historically low level. In all of our countries, when the buy-sell ratio gets around 0.20, we are looking at a very oversold market condition, and we can expect either some sideways to slowing momentum to the downside, or even a little bit of a burst to the upside. Okay. Hey, Michael V, thank you so much. Your comment to Michael Bryden says, good morning, and thank you so much for all the info you provided us with. Michael provided us in Canada with our mining, just a super breakout of mining stocks in all the different categories. And then just this, I guess, a Friday ago, he shared his method of repeaters. In other words, using strategies in a particular theme or the portfolios when stocks tend to show up in more than one or two searches or portfolios. Those are often your best candidates. So thank you for that, Michael, again. So listen, you can see the red. So we've transitioned from green to yellow to red, more red in the color guard, and now hopefully we're getting back to some yellow. But this is what's happening. And then in the US side, still 12.7% year to date. And again, that transition from significant red to neutral with yellow, and then red again, even with a star over here, which is momentum behind the downward move. So Friday, we did gain some ground back. You can see the buy-sell ratio went from 0.47 to 0.61, and the MTI gained a little bit as well. So we'll see what happens next week. And Australia, you can see all across the board, VectorVest does not advocate buying any stocks. Australia lost ground, still up 8.3%, but showing yellow, or sorry, a lot of yellow and a lot of red, and particularly an asterisk or star in the price column is a real cautionary note. And you can see the confirmed downs here, Canada, US, and Australia. We've been in a confirmed down a long time, longer than the UK here at the bottom left, but three red lights across the top in the UK, and then the EU. Again, that that EU should be reading 17.10 is where they're at now. So they lost 4.2 from this number, okay? And you can see why with the red showing up and the buy-sell ratio taking a big hit. All right. And the Long Island Stock Options Trader Group says we actually bounced off the 20 midday a few days back, but didn't close there. Does that count? Well, you don't like to see that momentum turn bearish at the end of the day, that's for sure. But on Friday, we did finish, in positive territory with most of the indices. So we'll see what happens from there. In the Canada, just a quick look here. Rising bond yields led to an exodus of tech stocks. Some of our darlings in the tech world lost a lot of ground, and the price of the VectorVest composite ended lower for the fourth consecutive week. And additionally, all three market timing indicators, RT, buy-sell ratio, and MTI, finished lower when compared to last Friday. So we have some economic concerns in Canada as we do worldwide, and they continue to weigh on the Canadian market. So proceed with caution, stay up to date with the color guard, and stay on top of any changes in market direction. So this is a 1-year daily graph, and I've had this trend, upper trend line and lower trend line, sort of that support levels that have held pretty well. But the longer they hold, the more likelihood that at some point they're going to break either to the upside or the downside. And we did break to the downside. We crossed below the lower channel line, and we crossed below the 65-day moving average. The MTI fell below 1, and that's why we got our confirmed down call right in here. Okay. In terms of 10-day price gainers, I put on the sector because it's a pretty localized market in terms of what's working and what's not. And the petroleum stocks, the chemical, those are the ones that are dominating to the upside. But again, there's the caution light is on. Ron's asking, how can we trade U.S. or Canadian stocks if we live in the U.S.? You got to find a broker that will allow you to do that. Maybe somebody in the group here has an idea for you. Yeah, we've got some great companies as well. And in Canada, I would say a good portion of our subscriber base trades U.S. positions as well. Here's what that looks like on a 6-month daily, and I put on the VectorVest support and resistance, and you can see we're at resistance right here. Support is way down here when you use VectorVest. My dotted line here shows that we might have found support on Friday. Where we had a couple of touches here, some touches here. So we'll see. The buy-sell ratio might break out of this channel. It certainly was hitting a higher low here. So that's a good sign. A little bit of bullish divergence on the buy-sell ratio. So we'll see what happens. But again, stay tuned to the color guard for the best idea. And then all of you can access all of the essays that are written by myself in Canada, by David in the UK. Just log into the UK to read David's essay. This is the one I wrote on Friday. A couple of things I highlighted here about the buy-sell ratio. Here's a tidbit from Dr. Leto's essay, September 11th, 2007. He wrote that the buy-sell ratio is by far the most revealing of the 4 indicators, the other 3 being the VectorVest composite price, MTI, and RT. How many of you, for how many of you believe that's sort of new information to you? Because VectorVest does give a lot of emphasis to the MTI. But how many of you found this sort of interesting? Just give me a why if you found it something sort of new to you and interesting, and you can go back and read that essay. And then we talk about how the buy-sell ratio helps subscribers identify a potential rally, as it did in Canada last Tuesday, a 2-day really strong rally, and it can signal the end of a rally. And Dr. DeLito wrote about that October 19th, 2007 as well, talking about the blast-off stage, one in which the buy-sell ratio and the price of the VectorVest composite are rising together, and it ends when the price of the VectorVest composite rises, but the buy-sell ratio fails to rise. That's the canary's warning. All right, hope that was helpful. Yeah, looks like a lot of people found that interesting and new, so that's fantastic. All right, in terms of the emotional market cycle, we've come down from these, sort of easy money. I would say over the last year, we've had a lot of trending market above with the MTI above 1, and now we've been kind of moving lower. And you can see the buy-sell ratio on Friday in Canada was 0.26, MTI 0.76. If I click there, this is the MTI in Canada. So we've come down to that sort of capitulation stage. Can we go lower? Yes, we certainly can. The historical low on the MTI is 0.6 and lower. And the US, we're currently right at 0.80 now. And we were at 1 last time we met. So we've moved a little lower on the MTI, and we've moved a little higher on the buy-sell ratio in the US. Really an interesting situation. All right. So the global market ETFs, I've got some exciting news about that. We now have them in a watch list in your VectorVest US software. There's the global markets ETF. You'll find them in the cherry picking folder. So I just highlighted here since our last meeting, September 10th was the Friday, and we met on the Saturday. Uh, well, only Russia has really made any ground. The Russell 2000 in the US, positive as well. Everything else is negative in terms of the world market. So now you can go to the global Market Ctf, and I'll just take us there really, really quickly, just so you can see where it's at. It's only in the US, by the way, just so you know. And I'll just bring it down here. So we just go to the Viewers tab, and in the watch list viewer, there's the global Market Ctf. Okay. So if you want to see which country's done the best year to date, you see there's 44 markets that we track in here. So VectorVest will keep this up to date, and we can click on Quick Test All, change the date, run that back to December 31st, click OK, run the test again, and do our sort. So there's Russia at the top year to date as well. India, 22%. So you kind of get the idea, and you can see the descriptions of the countries over on the left. So hopefully that's going to be helpful to a lot of you that have sort of been interested in that. Okay. And Lou is asking, what are the key levels to pay attention to on the buy-sell ratio? Really, the bottoming levels are the most important, and then the slope or direction of the buy-sell ratio on the MTI graph. But the bottoming level is 0.20, near 0.20 or below. Historically, that's the bottoming. Yeah, you're welcome on the watch list. That's pretty awesome. All right, and then also I'd asked Angie and the database team if they could add the sector ETFs that I track, and they are in your VectorVest US software now as well. So again, you can see petroleum leading the way since our last meeting here. Oil is also strong here. So you get an idea of what's going on. And I have a list of the top holdings in each of these sector ETFs, and I've just got to update it. And I think for the next meeting, I'll be able to send everyone a spreadsheet that has sort of the top holdings currently. Or if some of you are ambitious and want to just look up the ETF and make a watch list for the top holdings, that would be great. It's easy to do, but it takes a little bit of time. That would be the next thing I'd love VectorVest to be able to do, is just have that available to us as well. So I'm anxious to get them done and updated, but haven't been able to do it yet. So just once again, here's the sector ETFs, and there's XOP right at the top, the regional banks. So, and then of course, when you look at these graphs, what you really look for is the basic graph with RT. I prefer the line. And was that a good time to enter? And it was a new buy as well. So you could definitely find some oil and gas or petroleum stocks doing well right to there. Then we had that pullback, and now we're rising again. Pretty cool. Yeah, MR Consulting says you could trade the EWC ETF if you want to trade Canada. And interesting, last year, EWC didn't outperform the TSX. This year it certainly has, and the TSX has done very well. And EWC is the world market on that. So where is EWC? There it is right there. Yep, perfect. Thank you for that. All right, let's move on here. I want to make sure we've got time for David here. Oh, and we are right there. All right. And yeah, lots of appreciation for those ETFs, and I think it's great to have them in there in in a packaged kind of a way in our watch list viewers. So and lots of accolades for Michael. So that's great. All right, all right. So I'm going to just bring in David here. And first I'll make sure, David, your sound is good.
Yes, Stan, how are you doing?
Hey, good. And the sound is great. So I'm going to make you the presenter if your screen is ready.
Yes, sir.
And you'll have to accept that. And I'll bring it down here when you make it large. There we go. That should show up on our YouTube. Let's make sure. Oops. Okay. There we go. All right, David, it's all to you. So thank you so much for giving us your Saturday again. Much appreciated.
Thanks, Stan. Thanks for having me here, sir. Well, good afternoon, everyone. I hope you're all well. It's a miserable afternoon here in West London. It's throwing it down with rain. The first thing I've got to do is to repeat the disclaimer a little bit, just the UK one. Those of you that don't listen to me every week, in the UK, VectorVest is pretty much the only organization that sells investment education and investment software that's regulated by the FCA. So although I'm qualified to give financial advice, I can't do so because I haven't sat down with you and done a long and a very detailed fact find. I'm allowed to talk about those shares that I hold myself, but I have to make it very clear that although those shares are suitable for me, they may not be suitable for you. So that said, we can move on. I don't want to take up too much time because I know Stan's got an awful lot of really good stuff to talk about on Unisearch, etc. So there's really not that much to say. Stan has looked at the American market, and as we can see, pretty much everything is down, and it's been a very interesting week, that's for sure. And as you can see, the buy-sell ratio is sitting at 0.61, up quite a bit from Thursday's close, and the MTI at 0.8. Dr. Toledo's comment that the buy-sell ratio is the most important of all the indicators, certainly in the US, and in the US, the confirmed calls are in fact a function of the buy-sell ratio and not the MTI. In the UK, it's the MTI that is a part and parcel of the confirmed signals. So VectorVest does not advocate buying stocks at this time, and it's been saying that for quite a long time now. So that's the VectorVest composite of the US, and as you can see, it's pretty much done nothing since March. This is an equally weighted index of all of the shares that we follow, and the red and the green triangles are the confirmed calls, and as you can see, it looks a bit like a dog's dinner since March. In and out. The current call is down, and it hasn't been the easiest place to make a great deal of money, that's for sure. Most of the moves, certainly for me, haven't followed through. And I've kept myself alive by getting my stop to entry as quick as I can, taking off a little bit when I've made as much as I've risked, and then do my best to let the other half run. And recently I've been stopped out of quite a few of the positions at entry. So that methodology of easing out of the position or scaling out of the position has worked wonders since March this year. Last year, by scaling out of the position, I probably didn't make as much money as I could have because I was being right in quite a big way with only half the position. So it's kept me alive this year. Last year, probably I could have done more if I'd held the full position. But last year, in fact, was my very best year spread betting ever. So I can't complain. That's just a close-up of the same thing. And as you can see, the buy-sell ratio is making a small divergence. We'll explore that in a second, a little bit later. and the MTI making a double bottom. And we'll have a look at these levels in a moment. The levels are getting quite interesting. As you saw from the front page of VectorVest US, it's early, okay, to be thinking of a long. That's the DEW, which is firmly down. Even through the week before last's rally, the DEW couldn't, in fact, become positive. So that's called it reasonably well. Now, there's my old friend, the S&P 500. Those of you that know me will know that I trade this not that aggressively anymore, but over a day or maybe a couple of days for a living. And this rising wedge was fairly predictive. I didn't trade it up there, but there was an outside day, which I really like up there, and made a few bulbs short here. I was short most of last week. It was one of my best weeks on the S&P ever. Not because I was doing anything clever, but because the moves just kept following through. This pattern, those of you that are short-term traders, that's one of the most beautiful patterns. It's called a double inside, and when it breaks, pretty much that happens, that big day on the downside. It actually broke on the pre-market, and a lot of the moves this week, in fact, happened in the pre-market. I only got in at the open, but there was 56 points in that. So a very good week on the short side. 4 trades, 3 winners, and 1 loser. Actually lost 11 points in that little day in there. So that's what I do to pay for the lights and the water. As you can see, my 8-day stochastic is in fact showing a little bit of divergence, a compound divergence here, which is quite a positive signal. Now, in the next chart, I put up the fib levels, and this level of 4300, in fact, is a 78% retracement of that line. And I know for a fact that many big city traders had buy orders there. And I was in the city on, was it Thursday, and I spoke about it at the swing trading session on Thursday night that I did for Jerry. There was a heap of orders at 4300. Now, this is in fact the pit session, and market went down. It actually went down. I'll show you the 24-hour market in a moment. The market went right down and exhausted on the downside in the pit session in the early morning in Germany and in the UK trading, and then opened up pretty flat. But I'll show you the 24-hour market in a minute. And that's quite a strong reversal day at that level. Far too early to get involved yet. Now, I just wanted to talk through the technical scenario. Last week at our VectorVest UK Q&A, I felt that there was a possible 3-wave pullback based on this little corrective wave here. And in technical terms, that would be classed as a ABC pullback. And I told everybody last Monday afternoon that for this pullback to be over, we needed a close above that swing high. And that didn't happen. And in fact, the market rolled over to the downside. Now, there's still considerable downside risk here, folks. We've had one day up on Friday. I think the dynamic was the American sticking plaster, well, that's what I think it is, of the debt ceiling. They're going to roll that over, what, till December or something. But if this is now a new ABC, there could be quite another leg down here before this is over, because this leg and this leg should be the same in terms of points. So I'm not sure where this level is going to hold. And for this level to be confirmed, we need a close above that swing high. Okay. So those of you that are thinking of entering positions I think that as Stan said a second ago, the color guard will tell us this all automatically. But if you want to have a quick echo at the S&P 500, a close above that swing high and lots of green lights, I think that that will prove categorically. Now, unfortunately, the institutional traders won't be looking at VectorVest, but I assure you this is how they'll be analyzing the market. Couple of closes above that swing high, and as they say in rugby football, the ball is in, the game is on, folks. So I must admit I'm much more positive than I was, especially with this divergence. Now let's go to this is the 24-hour market, folks, and the levels are slightly different, not much from the cash market, and there's the 4,300 level, and that's the exhaustion that happened right down while Germany and the UK was trading, while America was still sleeping. And then we had this strong push up here. Again, we need to confirm this. We need to close above that high. And I think by that stage, the color guard will start to give us some green lights. Maybe even depending on the speed, the DEW might give us a signal. So there's nothing to do. But I'm starting to feel quite positive here. Now, I trade this darn thing for a living to pay for odds and ends. So if I see a setup long on Monday intraday, then I would be tempted to get into that based on this. Now, this divergence pattern that we've got between the price and my 8-day stochastic, you don't have to use 8, but I've been using 8-day, 8-week, 8 times 4 hours for a generation, and it works reasonably well. But what we've charted here is a very special divergence pattern, because the price has been falling, but the indicator has charted a double bottom and a rising bottom. Now, South Africans listening will remember Dr. Clive Rothie, and Clive was an expert on his indicators, and he's a really great old guy. He died maybe last year, the year before. And Clive would say that if you saw a divergence pattern with a double bottom and a rising bottom, I've never seen that fail, and I can nearly hear him say it. So that's, for me, that's quite positive. As you know, this level is 786 of that, and the market came down and ran that level. Now, one of my favorite beliefs of short-term trading anyway is that the biggest moves occur after the majority of people have been stopped out, and I think that there'd been an awful lot of stops underneath that low from the buy the dip, and I think that a lot of those people have been stopped out. So I remain reasonably happy, but I think it's too early to do anything, and if we haven't got a process, we've got nothing, folks. So just wait for the VectorVest process to kick in. At the moment, everything is down, and you need to be on watching stop losses exceptionally carefully and not blinking when you've got a stop loss to take to actually protect capital, because this even under the most positive circumstances, that bit can easily be replaced. Now, that crowd in the city that I talk about, they bought a heap of contracts on the S&P at 4.3, and they had another big order under that low. I'll tell you where it was now, at 4.230, just a tick or two above that low in case it didn't get down there. And they're now crying in their milk because the market actually didn't get down that far, so that they didn't get filled. And they are feeling, as I mentioned to Stan some months ago, a dick for a tick. In other words, they missed the fill. Nothing as miserable as missing a fill. They could quite easily get it yet. Okay, so feeling quite optimistic here that maybe the worst is over. but there's still significant downside risk. And at the same time, everything, all the trends are down. The UK people listening will know that I tend to be too optimistic. So, and sometimes I get a smack for that. I haven't got any US bets left. I got stopped out of HCA at entry. I got stopped out of Snap for a small loss. I got stopped out of Crux at entry. So that bringing the stop loss up to entry, taking off half when I've made as much as I've risked, that's kept me alive in this quite a miserable market. AMD to me looks interesting. Far too early to do anything, as you can see. There's my 3-minute moving average, and the difference between what I do and what Stan does, and just remember there are two different methods, is that I use my moving averages to define a trend. I don't use the moving averages for entry and exit points. So as far as I'm concerned, the trend in AMD is up and it's pulled back into this zone between the 21 and the 55, and it's now starting to chart a spring for me. And one of our most experienced investors here in the UK from the lovely town of Deal in Kent, he emailed me this morning and he said that he can now see springs in his sleep. I talk about them. He tells me it's all my fault. So AMD to me, folks, if we do get green lights, if we do get that close above that last swing high that I talked about, and we see this closing above that inclined trend line, then I shall be buying into AMD. Sure. And similarly, NVIDIA, very simple, a very similar business showing a textbook spring, and this, in fact, is starting to look quite positive here. It actually closed, went down, and ran the stops again. Always a good sign, folks. The best moves occur after the majority of people have been absolutely violated, is the only word that I can think of. Again, too early. Let's wait for the color guard to say yes. I shall be very interested in NVIDIA. I don't know what's going to happen next. All I know is if I get in here, I can put a tight stop and I can risk 1% to maybe make 3 to 5%, and I want to keep doing that. Get my stop loss to entry. When I've made as much as I've risked, get the stop loss to entry, and the damn thing can either go or it can fail, one or the other. So those are just two. That NVIDIA, in fact, one of the chaps at the swing trading session on Thursday night noticed that. So great work. You can probably hear the rain beating on my window here. It's coming down so darn hard. So that's the UK market timing. Clearly, a big part of that upswing in the US happened after the UK was closed on Friday, or at least if it wasn't closed, most of the people had gone home. The situation couldn't be, in fact, any worse technically on the front page of VectorVest. We've got a confirmed down, been in place now for what, 4 days. We have a down situation, and we've got a green light. Sorry, we've got a red light, and we've got a black star on that red light if we're looking at the live program winking at us. So the price is down day over day, week over week. And the momentum is measured by the RT on two moving averages, of which I've forgotten the durations, saying that the RT is trending down as well. And the little pointer is reminiscent of my car when I was a student. There was never any petrol in the damn thing. That was always looking like that. There's the VectorVest composite, and as we can see, it hasn't really pulled back that much, and I'll do a blow up in a second. Our market has been lethargic, and there is, in both sides of the pond, there are huge headwinds. There's a whole concept of stagflation that we haven't seen since the middle 70s. The whole concept of low growth and high inflation. Stagflation is a word that the economists dreamt up to keep themselves busy and I suppose off the drink until a reasonable time of the day. But very, very few people have got any experience in handling it. So the last time it was around, it was a mixture of Margaret Thatcher and Ronald Reagan that managed to pull us out of it. It's a long time ago. That is very similar to the US situation, as you can see. This level has been run. And again, if you would go from here to here, there's a fib level down there. And there's the MTI. There was divergence on the buy-sell ratio. And we really don't know how we start. We've had, in the UK, we've had only 3, this is the 4th confirmed down since February 2020. In February 2020, clearly that was the COVID one, which was one heck of a smack. We had one last November, which came to nothing. We had this one in July that came to nothing, and we've now got another confirmed down. On this confirmed down, ladies and gentlemen, we don't know whether it's going to be a 3 to 4 day wonder like this, or whether it's going to be like last February. So stop losses, and if you've got out and you're worried that you've given money back, well, just congratulate yourself that you've done the right thing. That will keep you alive. I know it's miserable to have drawdown, and it's miserable to maybe lose some money if you only got in at this one. But if you've got out, don't beat yourself up. Congratulate yourself that you've done the right thing. Following the rules and following your process is the only thing we've got in this business. The DEW has been down for a long time. The DEW has given some really, really great signals in the UK market, and that's been down since here. And that's, what, 2-3 weeks now. So that's been pretty good. I've got out of quite a few positions. I've got 2 on death watch. I was nearly in tears, folks, selling my Games Workshop, but I sold it on Thursday or Friday at 103. I bought in at 55, I sold at 103, and I'd added to the position a couple of times along the way. It was my biggest position by a long way, and I actually banked that on Thursday or Friday at 103. I have a sneaky suspicion that I'm going to be buying into it again quite soon, but nobody knows what's going to happen next. I sold Halma last Monday afternoon after the Q&A. I told everybody I was doing that because the VectorVest fundamentals were suggesting that there was precious little upside left in the share. The share was trading at 3 times the VectorVest valuation, I think, from memory, but the relative value was 0.7. So I decided that there was not much upside in that. That was before the confirmed down. So over the last little while, I've struggled with cash, but now I've built up some cash, and I sold that small chemical company, CRL or something. It was a very small position. Persimmons and Cranswick have closed below their VectorVest stop loss, and if, ladies and gentlemen, they break Friday's low, then they will go as well. Persimmons I should have sold a long time ago. It's done bugger all. So I'm raising some cash for the next upswing, which, as Stan said earlier, will come as sure as day follows night. You know, that's Games Workshop, and it kept that stop loss in that down day. My strategy is, and I've explained this to everybody, I watch it, and if it breaks down below the low of the day that clipped its stop loss, then it goes, and that's where it went at 103. So that's how I do it. I'm not saying it's right. And Dr. Toledo says as soon as you see a red there, you should just sell it the next morning, and he's probably right. But that's what I do. The gold market, well, the gold market, as you know, I'm very optimistic on gold. It's had a very good run. I'm paying the price for being optimistic on gold in my polymetal stock, although it's now paying me a 7% dividend yield, I think. The stochastic is down in the right place. I've got this compound divergence. It's not quite double bottom and rising bottom, but some compound divergence. And I was looking for an entry long here. It was a good one. I was long there and managed to get my stop entry, didn't make anything. This is the most positive it's been, and that was, I think, on Thursday. And when I looked at the 4-hour chart, I saw this outside bar. As you know, I just love outside bars. It encapsulated the trading of 1, 2, 3, 4, 5 of the last 20 hours of trading. So I bought it in there. And late on Friday, just before the market closed, I bought the stop loss to entry at 17.42. We shall see. I've taken off a little bit, and if the rest goes, it goes. If it doesn't go, big deal. So we'll just look for the next one. I'm still very optimistic on gold. This is a monthly chart. I see a huge prize here. And at the moment, if you actually look at this cup and this sideways, although it's been miserable for the last year and a bit, it's still in proportion, and we need to get through this high. And my advice is still for everybody: if you're not in gold stocks, then you need to sit and wait for a break above this trend line. I'll cover that in detail on Monday afternoon. Starting to get very positive on platinum. Very strong weekly close, which in fact is held up there. Again, on the weekly chart, we've got this treble compound divergence. And as you can see, there's a huge level here, huge level. So that looks good. And that's a small South African platinum miner. I know the mine well. I know the people well. They're loaded in cash. We had, I think, pretty much everybody at VectorVest UK rode this up. I know a lot of people have bought into it on this weakness. It's on a sell recommendation. And I'm not going to do anything until I see it break above that level. That'll be plenty of time. There is a weekly chart. Okay, so Jubilee. This is both platinum and copper out of Zambia, and this chart looking really good, isn't it? It's good to me. Markets come down here, and it's now pulling back. And you can see the overlap here, and that looks very corrective to me. Not far too early. Let it break up. There's going to be plenty of upside in this share. The copper market needs to make its mind up for us. There's the copper market, folks, sitting in this, that's called a pennant. And there's 5 waves, 1, 2, 3, 4, down to 5. This thing needs to make its mind up for us. Clearly, the problem here is China and this Evergrande business, which I believe they couldn't make a payment on their debt again in the middle of last week. So that's certainly not gone away. I'm hanging in copper. That if it breaks on the upside, there can be a huge move here. My commodity analyst who looks at the fundamentals of supply and demand believes that there's going to be a major shortage of copper relatively soon, but he's not a trader. He thinks in 5-year cycles. He doesn't understand stop losses. So there could be many a pullback before that. So at the minute, I'm holding it. It looks quite good to me, and hardly surprising. BlackRock World Mining is pretty much doing the same thing. This is a weekly chart again. I like the 3-wave pullback, but of course there's danger that it can get to that old high. I'm holding it. It's in a long-term portfolio of mine. It pays 6% dividend yield, maybe 5, 6, and I'm very happy with that as a commodity exposure. This for a trade looks very good indeed. This is Italian Mining. This is a small copper play out of listed in London, but the copper mines in Spain, so politically safe place. As you can see, it came off that top. Earnings per share is growing nicely, and if you look at this carefully, ladies and gentlemen, on the daily chart, you can see a beautiful bull flag there. So just watch that, a break on that, and some decent move in the copper price, and this could go a very, very long way. I haven't done anything yet, clearly. Just obey the color guard and use your loaf and wait for some green lights. The oil market has been something, hasn't it? It's a lesson to us all how we move from nobody wants the damn stuff until there's not enough petrol to fill up the cars. We've got a problem here in the UK at the moment, petrol shortage, not because of lack of petrol, I believe, but because of there's no lorry drivers to deliver the darn stuff, and people are panic buying. So there's a level here that is holding this. It's held it now for what, 1, 2, 3, 4, 5, 6 months nearly at that level. This is a monthly chart, I hope, yeah. But it looks to me as if we can get through that level. Goldman Sachs have called it to 90. Folks, if it gets to 90, there's nothing going to stop it getting to 110. So, and as you've seen, a lot of people in the UK have been very active in their gold sector. Paul Molina's listening. I know he's up to his eyes in oil stocks. And I see that oil has done well, energy has done well, coal has done well even in the US market. That looks to me as if it's got legs, folks, if it can get through that level. And that can be a big, big supply shock to the world. I've got one, got Shell, and I bought into Shell at the collapse down around here, and I've suffered through all of this. But it's that weekly break on Shell. I think I bet you it'll come back and kiss that. But that little bit should be repeated. That will take us up to there. And with the Shell dividend, that can be very nice indeed. So folks, to summarize, doing nothing is much, much more difficult than it would seem. And your job, until we get out of this mess, until you see some green, until you see, if you watch the S&P, have a look for a close above the last swing high, until we get out of this, then your job is to, in fact, manage risk, and manage risk very carefully indeed. I'm still very optimistic of a run, a big run up into Christmas once this is over. But maybe I tend to be too optimistic in life. So Stan, that's me done, sir.
Hey, all right, David. Thank you so much. A lot of great learnings in there.
Any questions?
Yeah, I did have one here that I thought you might want to touch on. You certainly answered a lot of the questions that were coming into the chat, but Neil made the comment, the S&P looks ready for a short-term bullish bet. And AP said, was that a head and shoulders forming on the S&P? So I don't know if you can call that up again just quickly and just see what there is for that head and shoulders. And
well, yes, they're frequently, people see head and shoulders and I see opportunity.
yeah.
Let me see if I can find it here.
I think it can go either way at this moment, can't it?
Yeah, I think that, let's get that line.
Well, you're looking for that. RC has just encouraged everyone to click the like button if you like these international forums and David's presentation. We should be over 100 here pretty quickly on likes if everybody will click in on that, and that certainly helps us grow our forum. So if you want to click the like button, we'd appreciate it.
I think that you can quite easily see this, and you could draw a neckline through these lows here by all means, yes, and that would take us down quite a way. So there's no doubt that there's downside risk. This could be a head and shoulders reversal, that's for sure. But I've always made my money by forgetting about the head and shoulders reversal and buying these lows. Because just remember, I'm not a forecaster, folks. I'm a trader, and my job is to to be profitable. I found that I've got to buy the extremes. I've got to, in fact, get in at an extreme where the risk is lowest and the reward is greatest. Now, if I buy this extreme on Monday, let's say above that high, I can risk 50 points to hopefully make 250, maybe 200. And that's how I think.
Yeah. That's awesome.
So,
And again, as we talked about and I wrote about on Friday in my essay, when that buy sell ratio gets down below 1, and especially when it gets into that sort of the 0.20 area or near it or below it, there can be an opportunity there. You know, what we've seen this year, David, I think is the MTI has stayed relatively high while the buy-sell ratio has been the indicator that has been falling to historical oversold conditions. So knowing that Dr. Toledo puts more weight or emphasis on the buy-sell ratio as a market indicator is maybe helpful to some, especially for traders, but even for longer term investors. You know, it's as David describes it sometimes a hard trade, but when the market has really bottomed and starts to rise from there, that can be the safest time to buy as well. By the way,
yeah,
we just jumped up on likes to 147, so that was great. Thank you, everyone.
the good trade is always the hard trade. There's no doubt about that.
Yeah.
That's, see, if this was I had another slide. There's nothing wrong with a head and shoulders reversal, nothing. But if I can just draw it for a second, then I promise I'll shut up, Stan.
Okay.
If you get a head and shoulders reversal like this, okay, and the textbook is that you sell it there, right? And this bit is repeated, the target.
Yeah.
But I found I could never make any real money doing that because you got to put the stop loss up there. Because if you don't, the darn thing will come up and faff around here for ages and then fall. So if the general market looks good to me, I'm happier, in fact, being a buyer there. Because I can risk next to nothing. And hopefully, if it works, I can make 4 or 5 times more than that. So it is a trader's perspective, I know.
Yeah.
The downside of it, of course, is that if this doesn't work, you look like a right proper Charlie because everybody will say, hey, there was a head and shoulders reversal there. But for example, the double bottom, which I've adopted on my spring, which is essentially the same thing. I traded a lot of double bottoms, and if you look at Edwards and McGee, that's the buy point, that's the stop, and that's the target. That bit repeated. Now here you're risking 1 for 1, and I could never make any money doing that. And then once I actually read Wyckoff's work, Wyckoff said that you want to buy right down here where you can risk 1 to make 5. And that completely revolutionized my trading. And that's why the UK people, unfortunately, see springs in their sleep. And those people that want to be short-term traders have got to be fairly brave, I'm afraid. If you're a long-term position trader that I'm trying to do in that portfolio that I manage on a Monday afternoon, then you don't need this level of sophistication. But if you want to be a short-term trader, my word, you've got to be brave. You really got to be brave.
David, thank you so much. I guess we better move on for both of us, but
Sure.
Very much appreciated by everyone. And Alan from Edmonton was asking about how can he attend your Monday afternoon webinars. Well, it's Monday afternoon in the UK, Alan, but it's early morning in Edmonton, Alberta. But you can go to the UK software. Several people chatted in for you. Go to the UK software, upcoming webinars on any Friday, and just register, and you will at least get the recording. Or if you want to get up early morning, you can get in there. Lots of great comments, David, for your presentation. So thank you so much for that. That was awesome. All right.
Cheers, Stan.
Thank you.
Take care, everyone. Bye-bye.
Bye now. All right. Well, I think you can see my screen now. Again, it's Stan Heller, VectorVest Canada. And I wanted to take a few minutes and talk about Unisearch Magic, maybe some tips and tricks for finding the best stocks. Some of this will be a review for our longtime subscribers, perhaps, but hopefully some of these items will be new as well. Greg is asking to post the link to the slides. We don't actually have a link to the slides, Greg, but if you send me an email, and my email address will be at the last slide, it's stan.heller@vectorvest.ca. I'll make sure you're on my list. If you have already received slides to previous forum presentations, please don't email me with a request because it just takes so much time to go through them all. But if you've never had an email from me, or if you don't get the slides sort of by Sunday late afternoon, then by all means, give me an email, stan.heller@vectorvest.ca. All right. So I wanted to talk about Unisearch Magic and just show you a few tips and tricks to maybe save you some time in finding the best stocks. All of this is predicated on market timing. Kamel made a great comment when we were having a chat about head and shoulders and other patterns on the indices, just saying, again, watch the color guard, look for those market timing levels if you're a bottom fisher, but otherwise, primary wave, green light buyer, green light in the price column, definitely the way to go. So love that. All right. And Michael from Ottawa says, no worries, as always learn something, and nowadays more so help remember what I forgot. Yeah, I'm the same way, Michael, no question about it. I learned some things even going through my presentation this week. But listen, the selection process, first of all, you've got to know your investment style. Wait for the market to enter into an uptrend. We've talked about that quite a bit today because of the urgency of the situation and the risk of the situation with what's going on in Washington and really all of our economies. Neil was chatting in about the petrol situation in the UK, and David mentioned it. So there's a lot of risk going on, but there's also opportunity, but we just got to wait for the market conditions to be right. And then you can run your selected Unisearch scans to find the best stocks. There's top VST, top relative safety stocks, if that's your main focus. Comfort index, that smooth price pattern. High CI on a scale of 0 to 2. Those new buy rated stocks, I get this question, I think just about every forum. So let me just take you there really, really quickly because it's kind of an easy one once you know where it's at. So let me just quickly show you where the new buy rated stocks are. So if I come down to this trends new stuff, you'll have a folder in all of our countries that says new buy rated stocks. The volume will be different. For example, in the US, it'll be 100,000 shares, but it's always the same. We're trending the stock recommendation under capital appreciation, right? And this is in your program, so you don't really have to create it, but you can add this to any other search that you like and just make sure it's got a new buy rating. So it's trending, that's the operator. And then when you see the window open up, I'll just move it down, you'll notice that it says equals a buy on day 1, which is the current day of the search. And before that, on the day previous, it wasn't a buy. Usually it would have been a hold, but it might even have been a sell going all the way to a buy. So that's an important one for all of you. I'm in Canada here on the current day. So these are 10 stocks, top VST stocks that got a new buy just on Friday. And my guidance on that in an essay that I wrote not too long ago now is when you get a new buy, for example, we got a new buy back here. There we go, right in there. We got a new buy on that day. Well, put your order into your broker about 1/8 of a point higher than the close of the day that you got the new buy. All right, so you got the new buy back here, and that way you can avoid some of the false breakouts. So on this day, the very next day, even though it was a red candle, you would have gotten in on that day once price hits your stop limit order to buy. All right, and then you'd be in the position if that was a good day to buy. And I'm not saying it was, because we're in a confirmed down. These are market timing signals. Primary wave, well, it was up for a day. Now it's down. So you'd have to use caution. But that's the new buy. And I thought I would mention that because a lot of people ask me about that all the time. And it's an important one. Delta searches, filters on watch lists, just a terrific method. I'm going to show you that again. You can go to the strategy of the week illustrations. There's a tremendous number of videos in both Canada and the US, and you can go back and watch some of the illustrations of different searches and strategies. Derby winners is a great way to find great searches that are working now. Trending Thursday and other YouTube presentations, the hot stocks panel, those sorts of things. And then quite often in our essays, we highlight a search. I'm going to show you one today that I highlighted, and that is to find stocks that have just moved into the top 20 value safety timing stocks, the top 20 VST. So they weren't there yesterday, today they are. And that's been a really great strategy that I've been able to use quite effectively. You still need to look at the graphs, but it's a great strategy. So know your investment style, your investment strategy. So I've set it out here again. Many of our subscribers are prudent investors, so we want that relative value to be greater than 1, the relative safety to be greater than 1. You'll be buying fairly safe stocks with upside potential, and you're willing to risk a little bit to get that with a high relative value indicator in that sector. If you're just all about capital preservation, you're looking at a conservative investment style with a low relative value, not always below 1, but you're not focused on growth. You're focused on capital preservation and typically dividends. And so the relative safety's got to be greater than 1. And that gives you stable stocks with strong earnings that often pay dividends. And then aggressive, you're going to be looking for more volatile stocks. Maybe you're a swing trader and you're looking for that upside potential in an aggressive position. Terry, that's a great comment. If you just can't find a search, let me just show you quickly here. If you just can't find a search, you're looking all over for it, and you just can't find the folder that it's in. Terry says, just click on the sort button, the A to Z button up here at the top, and then you can go alphabetically to the different searches. And for example, here's Blue Chip Bonanzas. And when you hold your mouse over it, it lets you know that it's in the retirement search folder, searches retirement. Great time-saving technique. Thank you, Terry. Yeah, Marty, I have participated in the trending, not the trending Thursday, but I have done the hot stocks panel, and they've asked me again to do that. It just, I guess they're hoping I'll do better than last time. But anyway, a couple of my picks have done well, and one has really tanked. So I put the kiss of death on it. But anyway, they've asked me if I would do it again. We just haven't been able to work out a date. You know, in retirement, my schedule is busier than ever. All right, so let's close out of that. So here, I'm not going to go into this. I just want to show you where that strategic investment matrix is, and you can look at the stocks that you typically trade, and you can figure out pretty quickly what is your investment style, and then you go from there, okay? And then I just wanted to give you a reminder of all the indicators and what they stand for right from the full stock analysis report. And these are your key four, I would say the four key indicators. Obviously, we have many others, but these are four key ones when you're thinking about what to buy. All right, and then the market direction. Don't buy when the needle is in the red. It'll say the color guard is bearish or mildly bearish, and VectorVest does not advocate buying stocks. Sometimes it'll say VectorVest advocates caution when buying stocks. That's if we've got a yellow light up in the top. But we only want you to buy if there's a green light in the color guard. That means the price is moving up. Okay, so unless you're bottom fishing with the buy-sell ratio really low, near 0.20 or below, and the MTI below, near or below 0.60, then you might be bottom fishing and aggressive. But otherwise, stick to these rules. Look for a green light in the price column, or at the very minimum, a new primary wave up signal. Okay, when you get a confirmed up signal, conservative and prudent investors want to be fully invested as soon as possible after that first confirmed up call. Now in Canada, we had a tremendously long confirmed up call from November 11th all the way till September 19th, I think it was, or 20th. And that's the second longest uptrend from confirmed up to confirmed down that we've had. Can't count on it. So unit search magic. Searchers look for stocks meeting a certain set of conditions at a fixed point in time. So the date that you run the search, that's the stocks that will be returned, that meet the criteria on that date. Searches can be performed on stocks. You can use watch list filters. You can search on industries or sectors, so I'm going to show you that. Searches are generally categorized as prudent, conservative, aggressive, or speculative, but there's other categories as well. Bear market beaters, the new buys, for example, bottom fishing, all those things. And searches can be sorted by groups or alphabetically, as I've just shown you. That A to Z function. So when you're selecting searches, you can select a search group, find the search that you want to use and run it. You can modify existing searches and then save it with a new name. You can create a new search and save it with a new name. Always important to study the graphs. It's fine to sort of try and automate your methods, but I find it's just, for me, I got to look at a graph just to confirm that I'm not butting up against resistance and that I've got some support. I'm close to a new buy, or at least I'm close to the 40-day moving average. I'm not extended, those sorts of things. And then add the best candidates to your trading opportunities watch list. Just create a watch list, call it trading opportunities or my watch list, whatever it is. So here's some of the folders that I like. Bear market beaters. If you have Pro Trader, there's channel breakouts, cherry picking, the delta searches. Everybody has access to these. And then typically, again, searches are categorized according to investment style. We have aggressive, we have conservative, prudent, and down below here, I didn't even show it, but speculative. And if you have Pro Trader, you can always take, if you don't, you can take a trial for 30 days and see if you like it. But if you're someone that likes to trade on golden crossovers, the 5 and 10 or the 20 and 50 or the 100 and 200, whatever it is, if you have Pro Trader, you can set up your moving average crossover. And then for swing traders, the MACD crossovers, the stochastics breakout, crossing above 20 from below, those are all possible when you have Pro Trader. You don't need Pro Trader to graph these technical indicators or studies, but you do need it to run searches. Everybody with me so far? Just type in a 5 if you're still with me, or a 1 if you just want me to get going on something new. 5 we're doing fine, and 1 if you want me to get going on something new. Terry says yes, and Charles says, how do you get into unit search? Most people are saying 5. It's all good. Okay. See a 1 there. Paul, nothing new yet. So I've got some stuff to show you, Paul. Okay, so just to get into the Unisearch, you'll see the tabs across the top of your page, Charles. Just click on Unisearch. All the searches then will be on the left. Okay, so all your folders, for example, candlesticks, we all have access to these. If you're looking for the hammer candlestick, here's maybe something on Friday. These all had a hammer pattern, and some will be better than others, so you need to look at the graph. Lots of fives. Thank you for that. All right, let's move on really quick. Boy, this 90-minute stuff really goes fast. For investment style, for example, here's the conservative folder, just a quick case study. We had a confirmed up call on November 11th, and we would quick test to 9 September 2021. That was November 11th, 2020, because that was the first confirmed down after the confirmed up call. Now you could manage your positions and take profits earlier if you have them, cap your losses, that sort of thing. But in this example, I just went to the conservative search folder and found the conservative stocks just to show you what you could expect in relation to the investment matrix, the strategic investment matrix. So then if we look at the search, you'll see that the relative value is going to be less than or equal to 1, whereas the relative safety is going to be greater than or equal to 1. So here's less than or equal to 1 on relative value. Here's greater than or equal to 1 on relative safety. So it did return an ETF here and a market index here in this search, and that's why we have 1 showing here. But this is what you would have seen, and boy, didn't TFI work out beautifully for a lot of our subscribers, whether you use this search or a different search, a triple-digit gain from the confirmed up call and dividends to boot. You'll notice the sort is dividend safety with this search. And the volume in Canada, 50,000, the US, 100,000, other countries, 50,000. But you beat the market, and that was hard to do because we had a really strong market. The TSX was up 20% from that confirmed up call to the confirmed down. And this strategy, even not counting the dividends, did outperform it. I will say I ran the conservative search in the US from a confirmed up to a confirmed down, and it wasn't nearly as effective. In fact, on a couple of them, I lost money. We get a few more whipsaws in the US with the confirmed calls than we do in Canada and UK and other countries. So on the Europe had such a fantastic run as well. We all saw it in the color guard, and the year-to-date return still over 17%. They also had a confirmed up call on November 11th, and it also closed or had a confirmed down on September 20th. So in that conservative folder, we look for that same conservative stocks. And as you might have expected, well, the results are even better. Interesting, in the Europe and the UK, they don't worry about volume and they don't worry about price. They just go for relative value less than 1, relative safety greater than 1. Obviously got some good VST scores on that start point, and there's a great return. Okay. So pretty cool. And again, look at the charts, make sure you're getting in at a good starting point, and you're going to do well. And then one final one here, I think getting close on the prudent side, just looking at the US here for prudent. Here's the DEW on July 21st. There were other signals I could have used. I used that one, and then they had a DEW down on, that was July 28th. That's not July 17th, that's July 28th, 2021. So just a short one. Oh no. Sorry, we ran this on 7/21, ended on 8/18. I hope I did that right. My goodness. Yeah, 7/28 we ran it. That was the DEW up, and we closed it on 8/18. My case study was totally out of whack, I see. But this is the case study, and Moderna, BioNTech, those were great stocks to be in. Might be changing a little bit with the Merck development on Friday, the Merck news, but Crocs was great. Some really good stocks here, and outperformed the VectorVest composite, basically 4-to-1 outperformance. All right, hopefully I've got my signals right here for the UK. DEW up signal way back on April 6th. A lot of countries had that DEW up on April 6th. So we ran the search on that date and held it till July 30th when we had a DEW down in the UK. Prudent search. So again, we're with a prudent search. We're looking for relative safety greater than or equal to 1 and relative value greater than or equal to 1. These are the stocks that it found. A couple of sell-rated stocks. So again, you might want to wait to buy in, but they all turned out pretty good and outperformed the market. All right. Getting lots of fives in there. Camille says this is all without risk management, and it is. It's just point A to point B. That's a quick test. Another way to do it is put them in a watch list, create a quick portfolio, and then you can actually see the equity curve and attach some buy-sell criteria to it as well. All right, so that was again, if we compare what happened here from that DEW up signal on April 6th to 7:30, we did pretty good. But if you just held the stocks to the confirmed down on September 28th, they kept going for the most part. So Camille's point about managing your positions was really important. You don't have to sell on a DEW down just because that's what we got. You can let them run. Now with 3 GOL, you certainly would have wanted to lock in some of that early gain here before you suffered a 15% loss, but overall pretty tremendous. So just wanted to give you some ideas about that. I think Delta is one of the most misunderstood indicators or operators that we have in Unisearch. So I wanted to talk about that. Delta equals a percent change from point A to point B. So we can measure that percent change over any period of days, weeks, or if you have real-time or premium subscription, you can do it in minutes as well. You can do deltas on price, on earnings, on dividends, on industry groups. And here's just some rules relating to when you use price actual and price split adjusted, because anytime you're using a delta, you'll want to use price split adjusted. Okay. Deltas, trends and new highs, new lows. Anytime there's a change in price, we want to use delta. Yeah, and comment, Dr. David Paul suggests closely monitoring stops for DEW down signals. Yeah, the DEW up is a great signal, and the DEW down is another one. But the other thing that a lot of subscribers do that you may not be aware of is they will enter the market on a faster market timing signal, especially if the buy-sell ratio is nearing that bottoming level of 0.20. They might enter on a green light buyer, for example, or even a primary wave up, but they will exit on a DEW down or even the confirmed down call. Or you might do it the other way. You might enter on a confirmed up call and exit on the first DEW down. There's lots of ways to go. All right, so here's just some examples. Custom 10-day price delta. So there's a search in your folder called 10-day top gainers. Now I modified this for the US market, creating it with price greater than $2 and 50-day moving average greater than 250,000 shares. And then stock equals top VST. Top 100 VST is what I chose. So I think what I wanted to just show here is the flexibility and some tips for using some of the criteria in your Unisearch. Okay. And let me just go over here if I can find it this is VectorVest US. So let me go to VectorVest US. Okay. Let's just see if I save this somewhere. So here's top 10-day price gainers. So what I really did was I went first to the Delta Searches stocks folder, and we've got top 10-day price gainers, and it's just bare with no other criteria. So I just went in and added a price criteria, added volume, and then just for demonstration today, I wanted any stocks that show up in this percent gain over the last 10 days to also be in the top 100 VST stocks. So let me show you how that works. So again, when we're using a delta, we use stock price split adjusted. Okay, so that's just stocks price volume split adjusted. Then we have delta as the operator, and we're sorting here at the bottom by 10 days. I've got weeks or days, I've got days, and I want it to be descending. Okay, stock price split adjusted greater than $2. You just type in 2, right? Custom date or custom value and then 2. There's your stocks price volume 50-day moving average greater than, and custom value. And the US, I just want 250,000 shares. This is one that I hope will be new for a lot of you, and it's to only find stocks that are in the top 100 VST. You'll notice in the prudent search folder, Chappell's Champs, written by Steve Chappell, this is exactly what he uses in Chappell's Champs to only find those high VST stocks. So here we go. Stocks, filter by, stock, equals, and then we go sorted, and I'm going to go custom, and I just rang this up from 10, which is the default, to 100, just added a 0 there. You can obviously just type it in once you highlight it. Whoops. As long as you type it in properly. And then you just make sure you've got your VST. Now, you can see we've got all of our other indicators available to us, but I just want the top 100 VST. So then when I click on OK, these are the percent gains over the last 10 days. And I move the sector over here to from the back of the viewer to the left of the viewer. You can just move it around, just left click on it, hold your mouse down and move it. But I wanted to see which sectors have been performing the best over the last 10 days. And there it is. You're welcome, Tommy. And Mike, yes, VectorVest has channel searches. If you have ProTrader, you can do a channel search, absolutely. And support can guide you on that as well. All right, so isn't this cool? So now we know that Atea Pharma went up 60% over the last 10 days. And so Vermilion Energy, a lot of petroleum stocks. So you can now right-click, highlight them, right-click, and view the graphs. And, you know, it's still going. This one is pulled away a little bit from the 40-day moving average. So you might want to see if it'll, you know, kind of pull back a little bit closer. But you can do this for 10 days, 5 days, 1 day, if you want just the 1-day gainers, and you're going to get some great trading ideas. Okay. Yep. Ninja says, this is very nice. Awesome. All right. Got a couple more things to show you, and then I guess we will have to close just because we've gone more than our 90 minutes. But I see a lot of likes coming in, so do hit that like button if you like this kind of information. I appreciate it. Let's move on here. So here's top 10-day price gainers in Canada. So again, Mining, I mentioned about uranium earlier. Those stocks are maybe going, oh, maybe I forgot to mention it when there was discussion about gold. Mohammed from Vancouver had mentioned that gold on the Huey, if you listen to the Monday night um, enhanced color guard reports, gold is not in a buy position, but uranium and lithium, those stocks are starting to move. Here's Cameco, very robust miner of uranium, and up 30% in the last 10 days. So you really want to keep an eye on that uranium watch list that Michael Bryden made available to us in Canada, or go to the industry group, and there we have uranium as well. But a lot of petroleum stocks doing very well, and natural gas up 46%. HNU, that's a 2 times leveraged natural gas. So hot sector deltas, you've got the 10-day RT delta, which is my preferred list. And here's the delta, 10-day sorted descending. And so we see mining, petroleum, we see drugs and chemicals, all in the top 10. And it tells you the percent gain in terms of the RT. And you can see the actual RT over here at the right. So here's the 10-day RT delta in the US. So petroleum, aerospace, these are sectors. You can look at that ETF watch list that I showed you earlier in the presentation, and you can also look at the sector viewer and just right click on petroleum, and you're going to get some great stock ideas, including VET, Vermilion, or XOP on the ETF side, up 34% in the last 10 days. Yeah, yep, definitely you can use this US in Canada, US, or any of our other countries. In Canada, I typically will use the sector RT rather than the industry group RT, but either one works good. It's just that some of our sectors in Canada, we only have one industry and sometimes only one or two stocks. So you got to be a bit careful there. Here's something that may be new for a lot of you. I did write an essay about this, so our Canadian subscribers and those that attend my Q&A know about this. But if you want to find stocks that have just moved into the top 20 VST, the top 20 VST sorted by VST, here's a search that you can quickly set up. 1 day ago, that stock was not in the top 20. 2 days ago, it wasn't in the top 20. And today it is. So African oil has just moved into the top 20 VST with a VST of 1.52. The RT is pulling it up, but also tremendously high growth rate for earnings with an RV of 1.53. So just very, very quickly here, I know I'm past the time I hope to take here, but if I can get to my Canada. If anybody has to go, just a reminder, you can go, and the recording will be here on YouTube almost immediately after the webinar, so you don't have to worry about that. Listen, here it is. I just created this from new. So here again is that parameter where we go stocks, filter by, stock. Okay. Notice you can filter on a watch list or portfolio, sector, industry group, or even an exchange, but I'm using stock equals 2. And then under sorted stocks under value, I'm just going to pick custom. And I just changed this by highlighting it and moved it to 20. And then I just made sure I selected stocks, or sorry, VST. So there's VST, click OK. And then in here, I just went 1 day ago under the date and time. Here I went 2 days ago under date and time. Stock. And this time I said does not equal to that top 20. All right. So you're going to get some great trade ideas from there. Not always. You want to look at the graph. Obviously I don't know what date to choose here. Let me look for a DEW at least. Okay, I'll go March 9th. So you could run that on the date, and there was 4 of them that were in the group at that time, and that was March 9th. And then just look at the graph and make sure they're in a buy mode. So there's March. So that one would have worked out, right? March 9th, you buy in, did pull back, but pretty darn good from there. That one, you had a chance to make some money. This one, you would have lost money if you just dived in, but hopefully you wouldn't just do that without looking at the chart. Same on that one. This one, you would have made a really good. So 2 of them made big money, and the other 2, not so much. 198% and 92%, and double-digit losses with a couple of them. All right. On a scale of 1 to 10, 10 being this is something I might add to my daily search routine, give me a 10. Otherwise, if you don't like it, give me a 1. If it's somewhere in the middle, give me a 5. Just give me a 10 if you think this would be helpful to you, just to come in and run on a daily basis to see which stocks have moved into that top 20 VST. I see quite a few 10s coming in. Quite a few 10s. 4th below is a 6, no worries. There's an 8 there, 8, maybe not running it every day. You can run it every week. On a weekend, you just like the new buy ratings, you can run the new buy stocks just on a Saturday and find out the stocks that got a new buy every day in the previous week. But lots of things you can do with this, okay? And then once you've got your search set up, you will just come to the save icon up here, this floppy disk, I guess. Haven't seen one of those for a long time. But you click on it and then click on Save As, and just make sure you put it in your correct folder, whatever folder you name, and then give it a name, and then you've got it. Then you don't have to create it every time. I've also got one that are just, they've been in the top 20 VST stocks for the last 6 days, and that can be an interesting situation as well. These are already in there, and you get some good returns out of those guys as well. Okay. So again, these are just 1 day ago, they were in the top 20 VST stocks. 6 days ago, they were in the top 20 VST stocks. I've got the equal button. So that's another one. All right, I'm just about wrapping up here. I know I have to wrap up. You can filter on watch lists. So this is that technique where we use 2 watch lists to filter on, the S&P 100 and the NASDAQ 100. So stock watch list, just equal to, and then it'll pop up in value with your list of watch lists, and you'll find the S&P 100 in the S&P watch list folder and the NASDAQ in the special watch list folder. And then you go stock split adjusted delta 52-week sorted, and you're going to get all the stocks that have increased by 40% or more, because I've got 400% over the last 10 years. This is basically 10 years, and that's a pretty great little search as well. All right, lots of 10s coming in. That's awesome. All right, so if you only want to deal with the best of the best, that's the way to do it. And we'll be showing this again in December, I'm quite sure, because Bob Turnbull is our keynote speaker in December, and he will show us his technique for finding the 40% annualized gainers over 10 years, a 10-year period to get the best stocks in these 2 watch lists. So make sure you attend in December. He will give us an update on his bull strategy. And next month in November, Dr. Ed Subak is going to give us an update on those thematic ETFs that are so popular with traders and investors, and he has some very special ways of determining which thematic ETFs to be in, and he's got a great watch list to share with us in November as well. So if you're not currently a subscriber, you can sign in for 30 days and just $9.95 US for 30 days. There's the number to call, 1-888-658-7638. And again, if you've never received an email from me about the slides, with the slides, just email me at stan.heller@vectorvest.ca at the bottom of your screen. I'll be happy to add you to my list. And I try to get the slides out, as early as possible tomorrow. Some will go out today, but most will go out tomorrow morning. So look for that. And again, I just want to thank everybody for coming again today and giving VectorVest your support. We appreciate it. Hopefully the lessons today were valuable to you. I want to thank Dr. David Paul again for giving us his valuable time, and really all of you for your valuable time. We're getting beautiful fall days, at least here in Alberta and southern Alberta. So I know it's a commitment to spend some time on your investing, but I think a lot of you will agree nothing is more important than our business of investing. So hopefully it was worthwhile for all of you. All right. Whoops. All right. So thanks everyone. Have a great rest of your day, and have a great rest of your weekend. And we'll see you in November. Thanks everyone.